So, we're going to dive into a story from way back in the 1840s that honestly feels like it could have been ripped from today's headlines. This isn't just about old-timey steam engines and top hats. It's a timeless story about a technology bubble, about incredible hype, and, well, about an entire nation that went completely bonkers for a financial revolution. Let's get into it. We like to think we invented the whole fear of missing out thing, right? With crypto or the dot-com boom. But guess what? We didn't. The British railway mania of the 1840s was an absolute masterclass in financial frenzy. It shows you in perfect detail how a really promising new technology can create a bubble that just destroys the lives of thousands. Okay, picture this, a world where people from literally every walk of life, we're talking vicars, widows, factory workers, were mortgaging their homes just to buy little pieces of paper for railways that didn't even exist yet. Even some of the most brilliant minds of the era, like the Brontë sisters, were completely swept up in this speculative craze. Now, to really understand the madness, you have to get the miracle that started it all. See, before railways, travel was painfully slow and tedious. But then, the first major railway connecting Liverpool to Manchester was built. At first, investors were skeptical, but when those first dividends came in, they weren't just good, they were absolutely revolutionary. And here it is, the magic number, 10%. You have to remember, this was an era with almost zero inflation and super low growth. A 10% annual return was like discovering financial alchemy. It seemed like a totally can't-lose investment, and suddenly, absolutely everyone wanted a piece of the action. So this gold rush created a brand new type of speculator, the stag. You can basically think of them as the 19th century version of a modern-day trader. The original meme stock flippers. Their goal wasn't to invest in the future of transportation. No, it was all about making a quick buck by flipping shares as fast as humanly possible. And here's how their little scheme worked. It was brilliant, in a way. They'd pay a tiny deposit, maybe 5 or 10%, for shares in a brand new railway. They'd get the official receipt for that deposit, which was called a scrip, and then they would immediately sell that scrip to some other, more eager buyer for a profit, because the price always seemed to jump. For a while, it honestly felt like free money, and that just poured gasoline on the fire of this growing bubble. Every bubble needs a face, a charismatic leader to rally behind. And for the railway mania, that face belonged to maybe the biggest personality in all of Victorian England, a man named George Hudson. He wasn't some banker or an engineer. He was a linen draper who became known as the Railway King. He was a master of hype who understood that a great story could be way more powerful than a boring old balance sheet. Hudson had this incredible charisma, and he understood one thing better than anyone. Investors didn't really care about the engineering details. They cared about dividends. His entire business philosophy was built on this one simple promise. He would keep the shareholders happy no matter what it cost. And for a while, they absolutely worshipped him for it. But Hudson had a very dark secret. He wasn't paying out those amazing dividends from actual railway profits. Nope. He was paying off his old investors with the capital he was raising from new investors. Yeah, it was a classic Ponzi scheme, all designed to keep the stock price artificially high and, keep the party going. And this scheme, well, it helped build the frenzy to its absolute insane peak. By 1845, the mania wasn't just for speculators anymore. It had infected the entire country. We're talking some of the smartest, most cautious people in Britain. The hype was just too powerful to resist. And this really shows you the incredible scale of it all. Charlotte Brontë, the author of Jane Eyre, was writing these super anxious letters about her family's shares in one of Hudson's companies. Her sister Emily, on the other hand, basically diamond-handed their shares, refusing to sell, convinced the price was just going to keep soaring. Even Charles Darwin invested. It felt like literally everyone was in on it. The numbers from this period are just staggering. In the single year of 1846, the British Parliament, which was caught up in this same euphoria, passed 272 separate acts authorizing the construction of new railways. 272! And the total capital proposed for all these new projects? An unbelievable £250 million. Now, to give you an idea of just how absurd this was, there wasn't even enough steel in the entire country to build all the tracks, or enough surveyors to map out all the land. The demand was just completely, utterly detached from reality. And to really put that number into perspective, £250 million was more than double the entire annual economic output of the British government itself. The country was essentially betting its entire future, and then some, on railway stocks. But of course, every party has to end. And this bubble, stretched to its absolute limit, was about to have a very brutal collision with reality. The crash wasn't just some market downturn. It was a devastating financial reckoning for hundreds of thousands of people. It all started with a tiny pinprick. In October 1845, the Bank of England raised interest rates, which made money less cheap. Then the harvests failed, which sparked the terrible Irish potato famine. Suddenly, people needed cash for food, not for speculative stocks. They started selling, and soon, everyone was rushing for the exit at the exact same time.
Now, here is what made this particular crash uniquely terrifying. For us today, the worst that can happen is your stock goes to zero, right? You lose what you put in. But in the railway mania, oh, it could get so much worse. Your worthless stock could actually send you a bill and bankrupt you. This slide shows the horrifying mechanism they called calls. Remember those small deposits we talked about? Well, investors were legally on the hook for the other 90% of the share's price. So when the companies started panicking, they issued these calls demanding the remaining money. People were legally forced to pay huge sums for assets that were now completely and totally worthless. It led to absolute widespread bankruptcy.
And amidst all this chaos, the railway king's empire just crumbled. His creative accounting was exposed, revealing the massive fraud at the heart of his operations. He got sued for enormous sums, fled the country to escape his creditors, and ultimately died poor and in total disgrace.
So, the story of the railway mania isn't just some quirky historical curiosity. It contains a crucial, absolutely timeless lesson for anyone thinking about investing in the next big thing, whether that's AI or biotech or whatever comes next.
And this right here perfectly illustrates the core lesson. A revolutionary technology and a good investment are not the same thing. The internet was real, it was world-changing, but that didn't stop Pets.com from going straight to zero. The exact same principle applies today. You have to be able to separate the amazing technology from the speculative hype. In the end, the railway mania did leave Britain with thousands of miles of track, a genuine technological revolution that changed the country forever. But for the people who actually bought into the hype, it was a financial catastrophe. The Brontë sisters and countless others learned this lesson the absolute hardest way.
You know, it all comes down to this one powerful idea. The price of an asset is so often driven by emotion, by narrative, by pure mania. But its true value, that's based on fundamentals. The ultimate question for any investor, then and now, is really simple. Are you buying the story or are you buying the business?